Right, 1 minute to go. Amy Bull is in Paris. Nice. I've got a friend that lives in France at the moment, and they say that the lockdowns there are just insane. Like, you have to fill out forms to, like, just wherever you even go into the shop, you have to fill out a form.
Yeah, I've heard that as well.
Like movement, like forms and stuff. It's nuts.
Just to leave your house.
Yeah, it's crazy. So, right, okay, so almost 12 o'clock. Let's get going. So I've sort of, and so he's an interesting cookie. And so what we're going to do today is talk about crypto and some new opportunities and stuff like that. Because this is a very interesting guy. So for the next 5 minutes, we're going to be talking all about Mike, just so you know where he comes from, etc. So tell us about Wordtracker. Wordtracker is his baby, basically.
Sure. So yeah, hi, I'm Mike Mindell. I'm speaking to that.
Yeah, if you just come a bit closer,
okay.
so Clubhouse can hear you as well.
Understood. Yeah. Am I looking that way or that way? That way.
Either way.
Okay. Hi. So I'm Mike Mindell. I run Wordtracker, wordtracker.com. I've been running it since 1998.
Jesus Christ.
Which is pre the first .com bubble, I think, and so 20 odd years, and it basically tracks what people search for online. So I know a thing or two about data and data crunching, and especially crunching what people search for on Google, as well as Amazon, YouTube, and eBay. And it's been an interesting ride watching all the search terms across the years. And we're dealing with sometimes, 80. I think at the moment we're crunching something like 80 billion searches per month. So we're talking about lots of data. Lots of crunching on cloud servers and AWS and Redshift and all this kind of stuff.
So do you have like lots of servers and data storage?
Yeah, but it's all in the cloud. It's all on AWS. So we crunch everything that way, and it's fascinating. It really is. So yeah, I when crypto came along, I was like, come on, take all that knowledge and bring it into crypto. And so I use the same skills for Wordtracker in crypto. And so I do all the back-end crunching for Wordtracker. So I have a team, a CEO who runs the company, and I get to do my love, which is the data analysis, and then use those same skills for crunching all the crypto data, both on-chain, which is looking at the blockchain itself, and also crunching the volume and price information to try and get a handle on what's going on with this thing. So yeah, that's
awesome. And so what was it that you were doing before Google did it? Was it keyword search tool? Is that what Wordtracker did before Google did it?
Well, we were around before Google even turned up. Yeah, I was speaking to Sergey and Bryn in their dorm room, I think, once, asking for their data.
Jesus Christ.
I can't remember which one I was speaking to, but he was like, "Hey, it's an interesting one." This was before they worked out the.
Facebook, can you still see us and hear us? Sorry, we've just had an internet swapping. I've no idea. There's always a lag. In fact, someone's put the hand up. No. I'm just going to continue. I think we're all good. The fact that it's... Yeah, this is interesting. There's like a 30-second lag on Facebook Live, yeah.
Maybe they can wave if they can see.
Yeah. Sorry, yeah, continue. Sorry.
All right. Yeah, so... before search terms from plenty of other places before Google turned up and basically stole the show.
Nice.
Yeah.
And so Mike, probably a couple of years ago, was talking about this weird thing called the click stream, which I didn't really get my head around it to begin with, but when I did, it was like mind blowing. So can you share what this click stream thing is and what it means?
So the clickstream is a simple idea, but the ramifications of it are really interesting. Basically, you go and do a search for something on Google, let's say shoes, and then you go to Amazon and click around red shoes and find Adidas. That sequence of clicks is the click stream.
Okay.
And you can tie that to an individual, and anonymously, of course, but you can tie that to an individual and work out what the sequence of clicks is. And when you put that and aggregate that en masse, you can see what everyone's doing at an anonymous level, because we're not interested in people individually, but knowing that 80% of people clicked on red shoes and then 20% of people clicked on Adidas, that's valuable. So that's useful for everybody, you know.
And so what, companies will pay big money for that?
Yeah, they do, but I mean, we just have our tool is, you know, it's not that much. It's I can't even remember. It's $20 or $30 a month, and it goes up, I think, to like 99. But it's not like we don't charge huge money, and people can just come on and they can research that data in real time, you know.
So is it useful for a small business owner, or is it just for big businesses? Or?
No, it's useful for like the Weather Channel down to a lady in Wichita selling candles. You know, at any level, wow. Knowing what people search for, knowing what actually people search for is essential, because that's how you can build your business. It's amazing how it's been made less important over the years, but it's knowing what people search for and tracking that is just as important as it ever was, despite what the narrative is.
Okay.
Yeah.
Sweet. So that's Mike in a nutshell. Well, we have Coco here as well. Hey, Coco. So I met Mike a long time ago, probably a decade ago, and we met at this sort of investment business dinner, where every month we'd meet up in London, have a big old dinner with, you know, other like-minded people, and we met a lot of interesting people in that group and people passing through the group, and obviously crypto, because it's a very progressive group. Crypto has always been a topic of conversation pretty much every dinner, probably over the last, I don't know, at least the last 8 years. And we saw, you know, back when Bitcoin was, you know, $100, rallying up to $800, then crashing back down to $100 and stuff like that. And I think over the years we've all been in Bitcoin and out of Bitcoin, and we've had some interesting things. So we've actually, as a group, been, I guess, scammed twice.
Yes.
So, and they both were in the crypto space. So because we were, I guess, an investment group, we would always receive pitches. So people would come and pitch to us. We'd invest in bits and bobs. And there've been some pretty good wins, haven't there? Like, I think, so we have a mutual friend called JBB, and he's invested in some of the pitches that we did. One was a clothes company, I can't remember, or whatever. But every now and then we get an absolute shit tip come in, and I don't want to open this can of worms.
Oh no, let's not go down.
Yeah, let's not go down.
We had a couple of bad experiences with crypto, but you know the thing is, I feel like Blowfield at the moment from James. I just got bitten by Coco. Did you see that?
Yeah, she can be a bit of a dick.
Why?
Yeah. Okay.
I feel like I need to
keep talking.
Stroking the cat, and it's just very much like James Bond.
Now I've got my hands around your crotch, trying to pull my. Sorry. Okay. Right.
She'll be back.
Yes. So
that was unique.
It's a shame that when I came to pick Mike up, that we weren't recording, because we instantly started talking about crypto, as you do, because that's all we do. And yeah, I wish we sort of recorded it, because I think it would have good value. So those of you who've listened to these wealth chats and watched my YouTube stuff would have seen that I'm a big fan of two Bitcoin or crypto models, which is the logarithmic regression curve. Again, it's all on my YouTube channel, and also the stock to flow. And Mike also agrees. I mean, add your 2 pennies worth, or your Doge coins worth.
How Doge. Those two models, fantastic. I actually love looking at a site called lookintobitcoin.com. Philip Swift does the charts there. It's fantastic charts, and he has stock to flow and logarithms. Let's have a little chat about that, shall we? I wish. What I would really like for people on this, on both Facebook and what's the other thing?
Clubhouse
to experience or really get is this idea of what logarithms are very simply, and also what it means to you right now. So in a simple form, there are different types of logarithms, but the most important one is powers of 10. All right. So normally when you look at a chart and it goes 1, 2, 3, 4, 5, 6, 7, that's linear, right? But a logarithm is when it goes from 1 and then 10 and then 100 and then 1,000 and so forth, right? When it comes to Bitcoin, right, we're dealing with logarithms. That's powers of 10 worth of value coming at you. If you want to visualize it, think of like, do you remember the film Interstellar? Right?
What a film.
What a film. Interstellar, on the first planet that they arrive at, have these huge, massive waves. Do you remember? They get out, they're looking around for their friends, and they're like looking into the distance, Matthew McConaughey and friends, and they're going, wow, those mountains look far away, don't they? And after a few minutes, it becomes increasingly obvious that they ain't mountains. That is a big wall of water coming at them, and those walls of water are massive, right? I mean, so big they're going to take apart the little tiny shuttle that they're in unless they get back in, right? That wall of water, it's a little tenuous, but just bring it in. That wall of water is a bit like the amount of value coming at you from Bitcoin, yeah? Because every halvening, you might have heard of the halvening, which is this event that happens every 4 years where the amount of supply of Bitcoins to the miners is halved. It used to be 12 and a quarter, now I think it's 6 and a quarter, and it's halving all the time. Creates this massive surge, like imagine a wave hitting a beach, right? Hence the waves thing, right? Creates a surge of demand. It's not so much demand, is it? It's the increase in value, the perceived value.
Well, the supply drops.
The supply drops. So in traditional
to a
supply
degree.
and demand, right?
Yeah.
But it creates this non-linear effect, as Plan B puts it, so that the actual value of Bitcoin increases not linearly, but like by this power of 10, which is why we've seen it go from $1 to $10 to $1,000. After the big jump to 20, it came down to 10 for a while. The next jump, where people are expecting 100, and Plan B from Stock to Flow thinks it's going to be more like $288,000. Like, that's a massive jump.
That's very precise.
That's using his Stock to Flow asset model. I don't know whether it'll be 288. I'll be thinking it'll be somewhere between 200 and 300. So, right? Let's just give it a room for error. But once it has that massive, thrust up, and who knows, it could be a double top, it could whatever. But once it settles and wow.
Yeah, someone's at the door. You carry on, I'm going to see to the door.
Once we have that big bull cycle reach its conclusion, and then we have the drop, maybe there's a drop, but let's say there's a bear market that ensues and then a reversion to the mean. Let's say that new figure's around $100,000. It was 10, it's now 100. Where's the next step? I don't think people really think about what's coming next after that. After 100 in powers of 10, we're talking about 1 million, and after that 4 years later we're talking about potentially 10 million. If something doesn't replace Bitcoin, and I can't think of anything with the scarce supply like Bitcoin, so it's entirely possible for Bitcoin to reach 10. It could reach up. We don't know how far it will go. And I was talking to Siam earlier whilst eating a Krispy Kreme donut. Toffee, if you must know. And what will happen if the entire economy gets eaten up by Bitcoin, right? I'm going to read this quote I've just got up, which comes, I think, it comes from an article, excellent article called Why Bitcoin, the bullish case for Bitcoin, and that is, imagine that Bitcoin is successful and becomes the dominant payment system in use throughout the world, and the total value of the currency could be equal to the total value of all the wealth in the world. Current estimates of total worldwide household wealth that I've found range from 100 to 300 trillion. With 20 million coins, that gives each coin a value of about $10 million. Can you imagine? You know what each Satoshi would be? A Satoshi is basically the smallest unit of Bitcoin, or 100 millionth of a Bitcoin. Each Satoshi would be worth 10 cents.
Nuts.
And, it's not a big stretch to go from cents to sats, is it?
Yeah.
It almost makes you wonder how thought about this has been, It's like, it's entirely possible that Bitcoin could be the dominating context of the world going forwards, not the US dollar, but actually Bitcoin could be the whole thing.
Maybe.
That's just my thoughts on it right now. I mean, I'm not saying that will definitely happen, of course. I'm just saying that's where my thinking is right now, especially being stuck in front of my computer for the last 2 years. So there.
And this is all you're doing on a daily basis now.
Yeah, I spend like 12 hours a day. I've been really loving actually following these two guys. Plan B is the stock to flow chap, and he's really worth following. Have a search for Plan B and Willy Woo. They did a podcast recently on the 10th of Feb. Willy Woo does also this on-chain analysis, and he has an amazing newsletter at Wooble or Woonomics, I think. But these guys, they are so worth following, and a lot of what I just said came out.
So I'm going to try and move the phone closer to the door. Don't know how this is going to work. So obviously that is one of the bullish cases of for crypto. But one thing that we must also be aware of is when you're dealing with anything exponential, which Bitcoin is, basically when you always deal in things that are exponential in nature, you have to look at the logarithmic chart, which is what Mike was saying. Spot on. But everything in nature which is exponential always decays eventually. So if you look at human growth, at some point in our life, I can't remember whether it's as a fetus or an embryo, we grow exponentially. But then exponential curves, it's more like an extended S curve. So it goes nothing, woo, exponential, but then it peters out. And so at the moment, yes, we are very much in an exponential stage of Bitcoin and crypto, etc. But what we know from just mere nature is that the exponential nature of crypto and Bitcoin will peter out eventually. When, we don't know, but this is why the halvening is so important to crypto, because it's the only constant in a whole world of bollocks, basically. Every 4 years, the amount of Bitcoin is halved per block. So before the last block, 1,800 Bitcoin per day was being mined, and now it's only 900. And so when you halve the supply of any commodity and you increase the amount of Jazz Deep, I've got some questions here. Hey guys, yes, this will be on my YouTube channel later. Just check. Anyone have any questions? Anyone on Clubhouse want to grab the mic and add their 2 cents or add a question? Don't be shy. So, okay, Facebook is always going to be a bit laggy, but I think, okay, everyone's being shy today on Clubhouse. Here we go. Marcus, you have the mic, sir. How's it going, mate?
Yeah, I'm not too bad, Simon. How are you?
Yep, good to hear from you.
And hi, Mike. Nice to interesting summary that.
Thank you.
So, with Bitcoin, do you think that with the rise of altcoins that the market share will drop? So, what effect do you think that will have?
So, what was the question again? Just
will the market share of Bitcoin drop when alts rise? Oh yeah. So yeah, I'll take this one. Yeah.
The altcoins.
It again, it's just my opinion. I think it's an inevitability. Yeah. So you always see Bitcoin running away, and it sort of does a slow drag of the whole market. But then, and that's why everything appreciates when Bitcoin rallies. But then eventually we have an altcoin rally, and so we haven't had that just yet. So yeah, we're seeing all sorts of coins going up 5x, 10, so far. But this is not the altcoin rally yet, right. And I think the leader of the altcoin rally will be Ethereum. So when Ether does its massive push, we'll know about it. We will massively know about it. And what it's done so far is just a natural Bitcoin dragging everything up with it. But I'm personally, again, this is just my 2 cents. I'm personally expecting an absolute meteoric Ether rally. Now, I don't care what it is in terms of dollars, how I don't care how high it will go. What I'm looking at is the Ether to Bitcoin ratio. Mm-hmm. So if you look at the Ether to Bitcoin chart, go back to sort of 2017, it was hovering around 0.1. So Ether was 1/10 of the price of Bitcoin. And then obviously we had the bear market, etc. And during that bear market, obviously Bitcoin is the one that moves first. And so Bitcoin has gained value against Ether. So now if we look I daren't open up a web page because it's gonna kill the internet. I'll try, and if it does, I'm gonna bail out. Stand by.
We have like a reverse Head and Shoulders, don't we, on the ETH BTC?
Yeah. So here we go. So right now, ETH BTC. So Ether is 0.034 of a Bitcoin. So it's like it's absolutely nothing. And so what I'm personally playing with the Bitcoin Ether Bitcoin players, so if you're looking at decimals, it's 0.034 of a Bitcoin, and I'm waiting till it goes to 0.1. So it's goes back to a tenth of the price of Bitcoin, and that is that chart, that ETH Bitcoin chart, is the thing that I am keeping my eyes peeled for, because when that starts going up, that means Ether is gaining traction back from Bitcoin. And not only that, don't forget we have huge, like loads of other projects also that will probably have their 15 minutes of fame as well, because we got the app platform sort of war. We got Cardano, Ethereum, Binance Smart Chain, and there's Polkadot, and I guess at the heels of them we've got Zalika and all that sort of stuff. So during the altcoin rally, all of them are going to increase against Bitcoin. So I think, I do agree with Mike that I think the world is moving towards a crypto sort of standard potentially. So I'm curious about Mike's thing on this. So I've always said that Bitcoin could eventually, over time, like 10, 20 years time, will end up just being 10% of the whole crypto market cap. And it will just act like gold does, and gold sort of hovers around that. What are your thoughts on that?
Yeah, I don't know about 10%, but I do think it's going to drop, because all these other projects are the next iterations, and I don't think Bitcoin's ever going to go away, because it is like the granddaddy. And the main reason I think that is because it's got the most penetration everywhere, and the network effect, getting it out to everybody, is one of the key good things about it, and it holds its value so well. I know people liken it to digital gold.
It's the face of cryptos, isn't it? So it's by the general population, they know what Bitcoin is, but they haven't heard of half the other stuff.
Yeah, it's the gateway drug, essentially.
It's weed.
Yeah,
you can't get rid of weed.
Exactly. Everyone Michael Saylor goes to Bitcoin first, right? And he's a big advocate for it, And Elon didn't buy 1.5 billion worth of Doge or Ethereum, did he? He bought it of Bitcoin. Yeah, I believe. It's the gateway drug. It's where people go first, and I speak to a lot of people who don't even have any idea about Ethereum. What's a smart contract? What's programmable money? No idea, right? So I think the focus is always on Bitcoin, but I don't know if it'll go to 10, but I mean, it's currently 60%. I could see it dropping easily 50, 40, 30, maybe even 20. But I think it's always going to be a large proportion of the system. I think in the last cycle it dropped, didn't it, to about 54. What was it? But against Ethereum, it was a big drop as Ethereum came up. I think it overtook it at one point.
Bitcoin hit 34% market share, total market share.
Yeah. So I could see, that around that level again. I could see, but I think these other projects are coming up nicely, especially Cardano and Polkadot. And if people are looking for the next thing to next horse to ride, those are pretty good projects to get on board. I think I could see $5 or $10 Cardano easily.
Yeah, same.
Exactly. I liken it to like a horse race. Bitcoin's out the gate. Which other horses do you want to get on to try and catch up? Because as Siam was saying earlier, with the ETH BTC ratio, if it gets back up to 0.1, like Ethereum is 10% of Bitcoin, it's quite easy to then jump over into Bitcoin. So imagine Bitcoin's out the gate fast, it's going, the horse is running, and Ethereum's catching up to it, and then you can jump over, and you'll make more Bitcoin than just holding Bitcoin. See, so that's a good way of looking at it.
It's all about those seesaw plays. And also, I can't remember, I mean, all these daily chats, they're all blurring into one, so I don't know which one I mentioned it. But it's all about top cover. So back in the military, if you had to do something naughty, as long as a senior officer was also doing something naughty, you're absolutely fine. And it was called top cover. It's like, oh yeah, the shit will roll on his shoulders. And so with investing, when you look at institutional investing, we now have top cover. So we've got Tesla, one of the biggest companies on the planet, ploughing it, or not ploughing in. I think they only put 5 or 6% of their capital reserves into Bitcoin, but still a nice chunky purchase of $1.5 billion. So that's sort of, a big boy doing it. And you now got Grayscale Investments that has $35 billion of Bitcoin. You then have MicroStrategies, which have billions. I'm not sure. And so you've got these big three companies, and it's just a matter of time until we have another gargantuan join in. It could be Apple, it could be Walmart, it could be Google, or did I say Amazon? Yeah. It'll be one of those. And we now have JP Morgan also going from the biggest hater of crypto to saying, yeah, you should put 1% of your liquid net worth into crypto. It's like, Jesus Christ. And so we've now basically got top cover. So if we have a CEO or a CFO of a major company putting a small percentage of their capital reserves into crypto, they're not going to lose their job. If they did that 2 years ago, they'd lose their job. All the shareholders would be like, what the hell are you doing putting money in my valuable money in crypto? So now there's top cover. And so so I always try and put my boots into like a bastard banker's boots, or no, not necessarily a bastard banker, but just a fund. Let's say you are a massive fund, or no, a medium-sized fund. So you got, call it anywhere between $100 million to $2 billion, okay? And let's say you've missed the boat, which is like basically most of Wall Street have missed the boat here. They've seen Bitcoin do its thing, and they're like, shit. They see Grayscale Investments doing its thing, and they're like, oh my God, we need to get in on this. I think it's a fair shout to say that once they start getting clued up, I mean, these are smart people that are running these firms, these funds, etc. They're not stupid. So once they've caught up, which they have been doing recently, I think it's a fair shout to say that they won't just plough into Bitcoin because it's already so far out there. Just like Mike was saying, they're going to look for another horse that it has more legs, basically, or faster legs to sort of catch up and close that gap. And so if you're one of these funds, you won't be able to, again, you don't really have enough top cover to go and plough it all into Dogecoin or some random shitcoin with a 50 mil market cap. What you will be able to do in your mandate, in your investment mandate, is to have exposure into crypto, of like a blue chip crypto. And so Ether is going to be right at the top of that list because it's the next best thing. Some people probably waste their money on Litecoin, but yeah, it's going to be Polkadot, Binance Smart Chain, etc. So
yeah, exactly.
What's this cool thing you have here? So
I don't know if you can
see it. Mike's got this little graph here, which you can't see on. In fact, you're going to have to verbalise it because it's going to be impossible.
I mean, I can post a link afterwards. It comes from this awesome article I was reading about the bullish case for Bitcoin. What it is, it basically talks about compares Bitcoin versus gold versus fiat, and the properties of each in terms of how good they are as money. So you've probably come across these before for fiat, where you've looked at how durable it is, how portable it is. Actually quite portable and quite fungible and verifiable. Is it scarce anymore? No, it's not. And what is scarce these days is gold and Bitcoin. All right. So when you start looking at the properties of money, you start, and I can post a link to this so you know what I'm talking about. It's basically a grid that gives the different properties of money, and then it shows a score from A to F of each of them, right? So for instance, Bitcoin is durable, it gets a B for that. Gold gets an A plus for that, think of a gold bar, and fiat gets a C, because you can burn it essentially. And portability, Bitcoin gets an A plus, but gold gets a D because it's hard to just, pick up a gold bar and give it to someone for a pint of beer. And fiat gets a B, and so on and so forth. And what I discovered from this awesome chart is that if you really want to preserve your long-term wealth, and I'm no expert here, usual disclaimers apply, but if you really want to preserve your long-term wealth, having some gold and silver and having some Bitcoin with the properties of each together is a pretty good thing. And what's not a good thing right now, given all the inflation that's going on and the money printing, is optimizing your wealth for fiat. Right? It's a bit like having a a plug taken out of your bath and all the water going down. Over time, various systems such as the Fed have been put in place to make sure that we don't get rich out of holding fiat. And if you look across history since China in the 11th century to now, you can see that fiat doesn't have a very good track record. But if we want to have a good track record of holding our wealth, holding some gold and silver, holding some Bitcoin, especially with the logarithmic effects of value coming at us, pretty good idea. I think I'm right on that.
Yeah, I'm with you. I love how in this chart it goes for scarcity or scarce. Bitcoin A plus, gold A, fiat F.
Exactly. And censorship resistance. Bitcoin A, fiat D, gold C, because of course it can be confiscated.
Yeah.
You put all these together and look at this, all the A pluses and the A's, well, they stay with gold and Bitcoin. Yeah, there you go.
Nice.
I got a little quote. If you're,
go for quotes. Yeah,
I got just to finish off. I got some quotes I really like. This is Michael Saylor again. He goes, for anyone worrying about volatility, Bitcoin is not volatile to an investor with a 4-year time frame. I like that.
Yeah.
The halvening taking 4 years to play out. And from earlier, if Bitcoin does go to infinite and we lose the unit of account in US dollars and we count everything in Bitcoin, that becomes the new money. That's the biggest idea for me lately. And the last quote, have I got time?
Yeah, we've got time.
The very last quote I've got is from Satoshi Nakamoto, whoever he, she or they is. And it's basically, it stayed with me ever since they produced the paper, or he, she. As a thought experiment, this is about Bitcoin, right? As a thought experiment, imagine there was a base metal as scarce as gold and one special magical property, that it can be transported over a communications channel.
That's cool.
That's Bitcoin.
Nice. I like that. So we have a question from Alexander. He said, question, when I purchased my portfolio originally in 2028, I'm guessing 2018, it dropped down to almost 90%. Now it's back to the same amount in GBP. However, if I checked in BTC, it's still about 75% down from the original amount. How to understand that, and how would you personally use it in your benefit? Do you want to answer? Or so yeah, that's not unique, by the way. Loads of people that, especially if you jumped in 2018 and you, let's say, ploughed into a whole bunch of altcoins or even shitcoins, then yeah, your portfolio in BTC terms will be down. But you're now with the slight uptick, your dollar amount or your pound amount will be, probably break even or a little bit more. So that's simply just because during bear markets, altcoins go down faster than Bitcoin, but in bull markets, altcoins go up faster than Bitcoin. So again, we can't give financial advice. One option you could do is just say stay put and just wait for that altcoin cycle. We know it happens every cycle. We always have Bitcoin cycle, then altcoin cycle. So we just haven't hit the altcoins yet. So you could just stay put. But yeah,
I'm the same. When you actually look back at, say, the history of Bitcoin, one thing has shown itself again and again. It goes down and then it goes back and it beats its all-time high. Will this continue? Mathematically, it says so, right? Will the demand still be there in the future? Well, you might get a replacement, you may, or it might just get absorbed by Bitcoin. But in the last 10 years, it tends to go down and then come back up. So if you get stuck in a down cycle, whether it's, well, let's stick with Bitcoin for the moment, best thing to do is just wait for it to come back up, It's just the safest thing to do. If you sell, if you have that fear of losing out feeling and sell, all that tends to happen is that the price goes up anyway without you. So if you want to exit, just wait for it to come back and beyond and then sell a portion of it. I think the same is probably true of the altcoins as well, though they don't all have locked-in scarcity. But history has proven that for a good, reasonable amount, not all of them, obviously a lot of them have gone to zero, but for some of them, like Ethereum, especially Ethereum, it's gone back up and reached its all-time high again. I don't think Cardano is Cardano back to its all-time high yet. I'm not sure, but it's doing well, and I have no reason to believe that it won't do so. So I always stick with coins that have gone down, and the buy the dip. You've probably heard this many times. I think the best thing to do is when there's a big crash, don't sell, just buy some more. That's what I do anyway.
Nice. Okay, so we're getting towards the end of time. So, any questions, please pop your hand up or pop them in the chat. But whilst we're waiting for the questions to come in, Mike, other than crypto,
Yes.
are there any new opportunities you got your eyes on?
I've heard that uranium's entering a big bull market cycle. So
Uranium, okay.
Yeah, I'm in a few trading groups and they go on and on about uranium, but I haven't looked into it in any great detail, so I can't really profess to be any expert, but that's something I'm looking at.
Nice.
Holding Mara and Riot in my SIP has done fantastically well.
Yeah.
So I don't know if you have a SIP, it's a self-administered pension scheme. You can get one with Hargreaves Lansdown or others. And you're not allowed to hold Bitcoin or Ethereum or any cryptos in it any longer because the FCA has basically said you're not allowed to. But you can hold proxies, and a proxy are like blockchain miners. So Mara and Riot are two big blockchain miners. I did incredibly well on the back of those. I think I told you about it a few months ago. And so, yeah, those two are pretty worth looking at, I think.
Cool. So we have Johnny Peters. Hey mate, you have the mic.
Hello everyone.
Hi.
So I'm just wondering about because we've got the DeFi sector now, but I was thinking, something to do with the oracles. So I think there's something about having the oracles, and I think that's going to be a very big thing coming up in the future. And it's just trying to pinpoint which ones, and you've got things like Chainlink, and then there's API 3 now, which is like not a third party, it's a first party one. Just have you got any ideas? Any thoughts on the area? Where do you think it's? I kind of know where it's going to go, but I don't know. Crypto is just amazingly complicated, isn't it? There's just so much going on every day. That it's just it's good to speak to people who do crypto as well.
Yeah, I mean, I don't know a huge amount about the Oracle thing. The only thing I really know about it is that it's the way to connect the offline to the blockchain, and to do so in a cost-effective fashion. I mean, we've actually been approached by API 3 to put Wordtracker into the blockchain via API 3 in the Oracle, and I can see API 3 pretty much consuming all APIs on the planet. I mean, why wouldn't you? If you had an API that provided any sort of value, why wouldn't you try and blockchain it? Because it's the new internet, so why wouldn't you? I think owning Link is probably a good idea. It's more expensive, I think, to do Oracle via that and API 3. But you pretty much said it. So who was I speaking to? Was it Johnny?
Johnny, yeah.
You pretty much said it. It's those two to look at, and I think take an interest in. The other, I do have one other thing. You guys have probably heard about NFTs, non-fungible tokens. That's the next big wave of something. I think there's a Banksy painting that got bought recently and put on the NFT and then burned. in classic Banksy style. So NFTs, non-fungible tokens, are basically a way of taking anything of perceived value and creating value from it on the blockchain that's recorded, and that's the next big wave that's coming at us, probably just starting actually, I'd say now. So have a look at that. Yeah,
I still can't get my head around NFTs. I understand NFTs to a certain degree, but then you read articles like Jack Dorsey's first tweet has just been sold for $2.5 million. I'm like, what? I don't understand that. What value is owning Jack Dorsey's first ever tweet? Can someone here explain that to me? So if I paid $2.5 million to own Jack Dorsey's first tweet, how am I going to benefit from that? Or is it just like owning a piece of art? I don't know.
Yeah, I don't know either. But I think you would be...
Well, it's like the artwork though, isn't it?
Yeah.
It's like the artwork. You can't ever display it anywhere, can you?
Yeah, true.
I mean, this could be like the glory days at the beginning, where it could do really well, but then suddenly they just drop in value.
Yeah,
they could. Yeah,
going in at the moment is all the hype.
Yeah, totally. Yeah, I mean, I'm not putting too much into it right now. It's very interesting. Look, we've got some more questions.
Cool. Yep.
Should we quickly go through those?
Yeah. So Alexander said, "Are you going to experiment with crypto in the nearest future and create another one of those Kryptonian portfolios like you did in January?" So Alexander, the Kryptonian portfolio isn't like sort of a new thing. It's just a portfolio that I do and I just maintain over time. It's not like, I think probably what you are maybe referring to is like, are there any other coins you're going to add to the portfolio probably. So yes, there's several phases, and I don't want to share the other phases with, I guess, the general public. That's really something it's for my students, because there's a lot of context behind it, which a lot of people here probably won't understand the context unless you've been trading with me for a while. And I'm just learning from my lesson. Like back in the day, 2017, one of my short-term moves was getting into Tron. I got into Tron at 3 cents or 2.5 cents. It rallied to like 30 and I got out at 21 cents. It was a great trade. Same with Neo and Ontology. They were great trades, but then people on the internet go, you said to get into Tron and it was like a shitcoin and it went down. I'm like, yeah, well, it went down after I got out.
I saw it go to $1 million like that. I remember that.
What?
Yeah.
Tron?
The portfolio you put on.
Oh yeah, but the whole portfolio went from $25,000 to $1.1 million.
I was there. I was watching that.
Yeah,
that was great.
And then it went down to $350.
Yeah.
350,000 because I got out Bitcoin a bit late. But so that's why I don't really want to share the up to date inner workings of it. But seriously, that Kryptonian portfolio and that recent video on my YouTube channel, that will look after you. So Aaron has gone top 5 coins both of you are holding right now or will be getting into soon. I'm not going to answer that, Mike.
Yeah, sure. Well, I tell you what I do, and I'm happy to give this out. Have a look at, there's a really good piece of software that I use called Shrimpy, SHRIMPY. It's a portfolio management piece of software, and you can basically take your Binance account, create multiple portfolios, and then it will rebalance your coins for you automatically, right? So what that means is, let's say you have 20 altcoins with 5% in each, it will keep those 5% ratios for you. So if one coin becomes 10% of the portfolio because it does really well, it will then share that excess 5% back amongst the other 20 coins. And if you have a look at the blog post, you'll see that rebalancing does better than hodling through all their backtesting and experiments. So I highly recommend you have a look at that, shrimpy.io.
I bet Binance loves that with all the trades.
Right, exactly. But they've also got this thing called maker optimization, where they'll put limit orders in for you to actually make the trades as cheap as possible. Right, so instead of just the 0.1% that Binance charges, they'll actually optimize it with these limit orders for you. Fantastic. Anyway, in answer to the question, I have 2 portfolios on Shrimpy using Binance. One portfolio has 20 alts in, but I count among them BNB Coin, ADA, DOT, the usual suspects, right? Another 2, because you asked for 5. Link, did I mention that? And I can't remember. Zilliqua, I think. And then I also have a DeFi portfolio, which is why I mentioned Shrimpy, because it manages the separate portfolios for you automatically using one account, which is great. One Binance account, multiple portfolios. So the second portfolio is my DeFi account, and in there I've got 7 DeFi coins like Aave, which is the lending one, and I think I can't remember the others. So while you answer that, I'm going to look them up.
Yeah, I prefer. I'm not going to share some coins. Just I've been burnt from people taking them out of context.
Right.
So I'll wait for Mike to do that. I'll just quickly script down to the next question. Stuart Roberts, in your crypto book, you say that Neo could hit $1,500. Is this still likely, and what would the time frame be? So with my answer is, I guess, yes and a no. Yes, over time, but not in the short term. So I've just pulled up Neo here. So when you look at the circulating supply, it's about 70.5 million. So in terms of total supply, the maximum supply will be 100 million, which in terms of crypto is a very, very small supply. If you look at loads of others, they're in the billions. And so for Neo, when Neo 3.0 comes out later this year, it's going to start doing its thing. I mean, even when it's dead, basically, even though it's pretty much a dead project, it's still sat at $41. And a lot of that is simply because of its low circulating supply. But when it does its thing, maybe not 1,500, I think it's probably a bit lower. I mean, if it's got almost a $3 billion market cap. So if we look at the overall cycle, let's say this cycle runs up to $5 to $10 trillion, and then you look at the percentage of Neo and that whole market cap, you can then easily work out, sort of $500 NEO for sure. Or no, nothing is for sure. Sorry. But yeah. So yeah, Mike.
Yeah. So these coins, these are the DeFi coins in a second portfolio. These are just the ones I do. I'm not recommending them to anybody, etc., etc. But the ones I hold that I have researched are Aave, AAVE, BAL, BAL, CAL for Celsius, Comp, which is Compound, COMP, Curve, CRV, Synthetics, SNX, Uniswap, the decentralized exchange, Uni, and Yearn.finance, YFI. I use that. I have made about 50% on my money doing that in the last couple of months, I think.
Yeah.
That's just no guarantee of future results, etc. But that's what I'm in personally.
Nearly every single one of those coins are already in the Kryptonian portfolio, by the way, folks. yeah. So, as I said, it will look after you. So, Richard, new FCA regs, that's a whole different topic altogether. Sorry, we're going to have to pass on that one. But long story short, you just you just cannot look. So for someone like myself, I cannot open up a chart of a regulated asset and infer any form of direction or even show you what I'm doing. So before, with my previous old legal advice, I was told that I could show a trade and place a trade myself and let people watch me, like people live stream gaming, but apparently that can't happen. So, for example, if I were to pull up a chart of Tesla, which is a regulated asset because it's a stock, and then did any form of inferring up or down or sharing what I'm doing, that would then be breaching FCA stuff. Ironically, crypto is not regulated at all. So I could literally say, go buy Bitcoin and it'll go to the moon and that'll be fine. But I can't say that about the FTSE or anything. So yeah, it's just weird. And I was like, seriously, all of YouTube, like everyone there is doing illegal stuff by, hey ho. Let's look at the questions. Alexander said, we're going to have to start rounding this up, folks. It's been 47 minutes.
Wow.
Any suggestion on where and how you can have a monthly direct debit investments to the crypto with small amounts?
Coinbase does that.
What, you can set up a standing order or a direct debit?
It puts a certain percentage in for you every month. Yes, I'm pretty sure Coinbase does.
Oh, cool.
Yeah.
Sweet. Amanda, that's interesting. In Shrimpy, do you have 20 coins for it to work? Or can you say 10 different coins?
Yeah, you can have as many coins as you like. If you go for the blog post, you'll see they recommend about 20 and a 5% threshold. Those are the magic numbers. Please go and research it though. Don't just take my word for it. Look at all, rather than just plug it in, but have a look at the blog post and you'll see that's what they recommend. So I do 20 because they recommend that. Yeah, so you don't have to have 20, you can have 5. It's up to you, but they make it very easy to do.
Cool. Well, that was another half an hour session. One day I will do a half an hour session. I'll try. Big congrats to Mike, because I really did bring this on him. He was
5 minutes notice.
So thanks everyone. I'll be here tomorrow. I can't remember off the top of my head what the topic is tomorrow. But yeah, I'll see you at 12 o'clock and I'll see you soon.
Well,
bye Mike, bye. Well, bye everyone.